What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is season number 2, episode number 1. We're doing it a little bit differently today. I was trading a prop firm account a little bit earlier in the year doing the evaluation, but I had to put it down for a second. But now I'm picking it back up and getting back to it. So we made some trades today in this account. So let's go ahead and break it down and get into it. So first and foremost, let's talk about the key levels that we have on the chart today. So we have yesterday's closing price represented by the purple line right here at 34,343. And that will play a pretty significant role in today's session. So let's go ahead and get straight into it and talk about what happened when the market opened. So when we opened, we actually sold off pretty significantly, pretty similar to what we did yesterday. So it's really interesting how the market can sometimes give you the same things over and over on back-to-back days. That's very interesting right there. So we sold off, eventually created a low right here, and we came back to this level of support. Now, if we follow this across, this level of support actually came from a level that was a low during the pre-market session from the London hours. So that level actually ended up becoming a major level of support as the New York session started to open. Now, once we got to that level, we closed right there, pushed back up a little bit, came back up to retest a major level of resistance that we established in the pre-market. And from that point forward, we just sold off. And, I can't really describe what this price action is. All I can say is that we made a higher low right here in comparison to where we came from. But then we pushed back up and we made a lower high. So in situations like these where I see a higher low on the bottom and then a lower high on the top, I just sit back and wait until the market gives me a more clear-cut signal, because you could really argue both sides in this scenario. You could justify somebody going long right here once they saw this higher low and then taking it back up to yesterday's closing price. But you could also justify somebody going short right here once they saw this lower high and then saw prices break back down below yesterday's closing price. So in scenarios like this, I just sit back and wait until I see exactly what I want. And then when I see what I want, that's when I want to start operating in the market. So I see prices come back. They retest this support level. And I saw them kind of start to form a mini consolidation zone in between 333 right here and this low at 316 where the support level is. But over time, we kind of saw that eventually we established this lower high right here. So once I saw the fact that we had a lower high up above from before, we broke down below yesterday's closing price and then created you can call this a swing high right there, followed by a lower high. Once we broke back down through support right there, that's why I went short on trade number 1. So if we read the notes right here, it says, I shorted here during the downtrend after seeing a lower high and a retest of resistance. So when I'm looking for a short trade, that's exactly what I'm looking for. I want to see that lower high which is followed by previous other lower highs. I usually don't like to get the first one because sometimes the market can kind of flip-flop back and forth and violate that first lower high. So once I see the second one and then the third, I have a lot more confidence. So once I saw this third one, this third lower high start to form, all I did was wait for prices to break back down support, which should now become resistance. And as soon as prices come back up and test that level, that's where I want to go short from. And then I just want to take that trade and short it back down to the next major level of support below, which in this case happened to be the wick that got established from the initial sell-off when the market opened at 930 down here at 34,295. So after trade 1, we see prices continue moving lower. So as the downtrend continues, I continue to use the methods that I like to use in a downtrend. So I draw levels of resistance based off of where I saw levels of demand start to kind of creep into the market and where I saw buyers step in. So on this one specific candle right here, this doji, let's zoom in a little bit. So on this doji, at one point in time, this candle was green. So what I did was I drew a level of resistance at the open for that candle, and then pretty much just drew another level of resistance on the lows of that candle where we established the swing low. Now, since those levels were so close together, I just went ahead and made it a zone instead of just using 2 different lines. And then as prices came back up to retest the top of the zone right here, that's where I shorted on trade number 2. But if we read the notes, it says that I shorted here, but I got out quickly when I realized the tweezer bottom wicks. Now, I'm not really the biggest user of candlestick patterns, but there are some of them that I definitely respect to the utmost. And anytime you see a tweezer bottom where you have 2 wicks that pretty much are either dojis or They could be something like this, where it's not a doji, but both candles still have a good close on the bodies, but you still have these long tail candle wicks. Whenever you see those, you always want to respect the fact that the momentum is coming into the market, because that's what a tweezer bottom shows you. So once I saw that, I was like, is this a level that I really want to go short from? And when I saw that my trade initially worked, it gave me like 2 or 3, maybe 4 to 5 points worth of profit, but then immediately came back to my entry. I said, you know what? I don't feel 100% confident in this trade. I don't like the tweezer bottoms down below. So I just got out really quick. I think I went short at 80 and then I bought it back at 82. So just a little 2-point loss, but I think I did a good job right there of just being disciplined and recognizing exactly what I was looking at, because I think a lot of times in the past, I just would have held a trade like this because I used to have a mentality where I believed that if I got into the trade, I'm going to hold the trade no matter what happens. But if you start seeing signs that invalidate the initial reasons that you got into the trade, don't hesitate to get out. Get out while you still can before you have to take a full stop loss. So I think I did a fairly decent job right there on trade number 2. So after trade 2, we actually formed the bottom, the lowest price that we made for this session so far as of the recording of this video. And then we pushed up, created a higher low. So I circled that up, drew my level of support across it, but we actually never came back to retest that level. And we shot all the way back up to yesterday's closing price after we formed one more higher low. So anytime I see those higher lows, I circle them up, take my level of support and draw it across. Now, on this specific occasion, I wanted to talk about this higher low because this one is a little bit different than what we're usually used to. So the normal variation of the higher low is when I would just see a higher low, circle it up and draw a support level across the lows of the wicks for whatever the higher low, wherever the higher low resided at. But there will be some occasions where that higher low not only closes at the body, but it also gives you a long tail candle wick. And what I've learned is that you can pretty much look to go long anywhere within that area. So you can pretty much box up a consolidation zone between the close of that higher low and the wick that higher low gave you, and then use that as a reference point to go long from if prices ever get back to there. So that's pretty much the mindset I had and that I was looking for. But as we can see, prices didn't really come back and retest this higher low until a lot later. So we'll get into that. But before all of that happened, we shot straight up past yesterday's closing price, and we pretty much had a 1 2 3 4 5 6 7 8 9 10 11 a 12 candle spike to the upside, where we had only one red candle and all of the rest of them were green. So that right there tells you that momentum to the upside is definitely in the market. So you always want to respect that. Now, if you look at where we came back up to, this green line right here of what used to be support in the pre-market, once prices broke back down below that, it became resistance. So as we come back up into that resistance level, we see that prices didn't really have a reaction on the way up or on the way down. So that's interesting. That tells you that the buyers were very strong enough to just shoot past that level, and the sellers were equally very strong enough to just shoot past that level. So that kind of gives you just an indication about what the volatility in the session could be like. And it tells you that more than likely the volatility will be higher because buyers are coming in and showing all of the strength that they have with pretty much no selling to get in the way. I think the only selling we could say probably took place here was profit taking. And you can see that based on the wicks as we come back up into major levels of resistance. But then also on the way back down, the sellers had pretty much no resistance from the buyers. The buyers was like, all right, sellers, y'all want to do that? Go ahead. We're not going to get in your way. You might have had a little bit of profit taking here and there on wicks like this one and wicks like this one. But other than that, the sellers were in control. So that tells you that if both sides of the market have displayed equal strength, especially when it comes back to back like this, that tells you that the session has a very high chance of being very volatile, which just means that the opportunities that you're looking for, they're probably coming sooner than later. So notice how this sell-off took us all the way back down to the higher low that we established from earlier. And notice as soon as we got back to that level, we immediately bounced up off of it, created a higher low right here. And this is the higher low that I used to go long from when it came back to trade number 3. So notice how this higher low is also formed on top of yesterday's closing price. So a higher low by itself is significant. But then when you get a higher low that gets formed on a major level of support or resistance, like yesterday's closing price, it makes that higher low even more significant. So that means that if prices come back to that level and you see them start to have a positive reaction to the upside and have a good bounce, that means that more than likely you can get in long and ride that trade to the upside. But on the flip side, it also means that if prices come back to that higher low and break down below it, you could see a very strong move to the downside. So just remember that a higher low that gets established on a major level of support or resistance plays a much more important role than a normal higher low setup would be. So once I see prices come back to this level and they start to move away, that's where I went long right here on trade number 3. And then I just took it back up to 373. Now I thought about taking it back up to this level of resistance above, but I just wasn't quite sure if the buyers would have enough momentum to get all the way back up to that price because of the strength of this selling that occurred a little bit earlier right before I got into that trade. So one of the things I like to aim for when I'm trading in the market is I like to aim for those quarter levels. So a quarter level in this scenario would be 300 even, 325, 350, 375, and then 400, and then 425, 450, so forth and so on throughout all of the hundreds as you keep moving up. So those are like the minor quarter levels, the quarter levels that occur between each 100 level. But you also have major quarter levels that occur between each 1,000 levels. So we're at 34,000 right now, right? So for 34,000, the major quarter levels will be 34,000 even, 34,250, 34,500, 34,750, and then 34,000. So when I'm in a trade, depending on where I'm at, I'm either using the minor quarter levels or the major quarter levels. So on this specific day, I use the minor quarter level and I look to take it back up to 375. But I like to get out a little bit in front of the level. So I got out at 373 and that was a pretty decent trade for me. And after that, I just decided to call it a day. You know, I think where I went wrong the first time I did this trading challenge earlier in the year, where I think I went wrong when I tried to just keep pushing and hit the profit target goal as quickly as possible. What I've learned over time is that you take what the market gives you here and there, you take your best setups, and then you gradually work your way towards that goal. You don't have to get it all at once unless the market just offers you a trade like that is really that good. But other than that, you got to be patient and you got to be disciplined. And that's one of the biggest things I learned from the last trading challenge I did. So I just called it a day right there. And I would say that overall, my performance today was pretty decent, not bad at all. And I would say when I'm patient, when I'm focused, and I only take the setups that I know, I tend to have a very high chance of being successful on that day. But it just comes down to a mindset, because it's easy to say that, yeah, if you're just patient, disciplined, and focused, you can make money. But you have to actively be about that. And you can't just say, I want to come in and be patient, disciplined, and focused. You got to be able to make that a lifestyle. So you got to wake up and think about being patient, disciplined, and focused. You got to practice and think about being patient, disciplined, and focused. And then when you come into the live session, all of that will just transfer over and it'll be second nature. So that's the biggest thing I want to work on this weekend going into my back testing sessions. I really want to make sure that I do everything I need to do to actually pass this evaluation this time, because I feel like I have all of the tools available. You know, I've done, I think, 72 trade reviews since the time that I stopped my last evaluation account. So I've learned a lot and I'm ready to take all of that knowledge and actually apply it. So I'm excited about going forward into the future. I appreciate you guys for sticking with me and following with me along my journey. I'll be back again on Monday, September 25th, 2023. But until then, you guys have a good weekend, study hard, and take it easy.